Good morning, good afternoon, good night. Welcome back. Welcome to. My name is Joe Josh. I go by iChart Daily Cuzzies. Follow me, the iChart Daily on X. Everything else is iChart Daily. Today is December 17th, 2025. In today's video, I'm going to be going over Bitcoin confirmations playing out on even longer time frames, where I'm setting alerts. What am I looking at? Short term, mid-term, long-term indicators. What are they telling me? Where should we be setting alerts? And going into the nitty-gritty, because as we enter the holiday season here, this is not financial advice. This is a window to my thought process. I have been doing technical analysis for literally 17, going on 18 years now. And I've been trading and investing and charting crypto, especially Bitcoin, because it's the first one, for about 10, going on 11 years now. So let's get into it. Let's get into it. First things first, I don't like what I'm seeing on the longer time frames. What am I seeing on longer time frames? Confirmations to the downside. The first thing I look at is longer time frames to help me understand the overall momentum of the market. Yes, we could have dead cat bounces on every time frame, but if you're looking at the longer time frame and you're getting a potential death cross on the horizon, your RSI has not only broken below the 70 line, but broken below the moving average. That's another bearish confirmation. And then your stochastic RSI, not only death cross, but broke below the 80, showing me that all three have room to bleed and a continuation, a higher probability of a continuation to the downside. Now, what does that mean? That means, we could come all the way back up to 110,000. Right? That means we could even go back up to 120,000, like we did here. My only concern, Cuzzies, is what happens thereafter, right? Do we have a continuation to the downside, right? And then retest the 71,000, right? And break the 11-day moving average and officially head to the 21-day moving average. Now, this again, once again, is a 2-month chart. I want to be very, very, very honest. This is a 2-month chart. This one candle still has 14 days left to just print itself, and then you have another 2 months, January, February, right? You cannot be fooled by the BS that happens on a 4-hour or daily time frame. And what I mean by that, I'll get into it, right? I'll get into it. And I'll end the longer time frame technical analysis with this. A lot needs to change in order for this to not death cross. In order for this to turn bullish, not only do we need to go back up, go above the moving average, but then break the 70. This has a higher probability, because it's a faster moving RSI, of having this being a fake out, and then we do come back in and we're bullish again. So what I think happens is we do have a dead cat bounce over the next 1, 2, 3, 4 weeks, 5 weeks, like leading up until February, March. I keep saying tax season. And because we're so oversold, I do think we could come back up, see a nice little move like this, right? See a nice little move like this, see a nice little move like this, and we have that sharp recovery. But once again, if we come up and don't make a higher high to the 76.23, then we have a high probability of doing this and then doing this, because once again, steps on the way up are bullish. When your RSI is above the moving average, it's bullish. When steps start going down, that's bearish. So we went here, right? 1, 2. Now I think we could come here, and if we see rejection by, once again, March, April 2026, then that confirms we are now into another section, room to bleed and break the previous low, going to your next lows of, let's just say, 55 around here. Now, we zoom in. We'll get to some type of bullishness here, but we'll zoom in here, okay? First thing I notice is the RSI staying above the 50 line on the monthly time frame, showing me that we are not breaking 87 to 86,000, which is going to line up with your 21-day moving average. So that gives me somewhat bullishness. Once I start seeing the time frame is the 3-day, the 2-day, and the 4-day, right? So I posted this picture the other day. Let's go into the 4-day, right? And if you remember me saying in the video, most of the time, recoveries aren't V-shaped recoveries. And what I mean by that is blood, and then it's just like, yep, that was the bottom, we're going back up. Most of the time in charts, the markets want to see a bottom forming. I keep saying on X and YouTube in the post, it's forming a bottom. It's forming a bottom. And what does that mean? That means price stays flat for a while the indicators start forming more bullish structures. Bullish structures meaning higher lows on its waves, macro waves, right? Confirmations into bullish sections instead of bearish sections. Sorry, I can't speak. And we'll go into them, right? So the first thing is, when does this happen? That happens when the RSI breaks above the 50. If the RSI is not above the 50, not only above the moving average, but not above the 50, you're not breaking the 11 and 21-day moving average. Now, what am I seeing? Well, what we're looking for and what we're seeing is the first leg up, right? We were death crossed since October 2025, and we went down from 123,000 to 80,000, okay? This one took us from 108,000 down to 77,000. What we want to see is the price somewhat stay flat, right? Let me show you what I'm talking about. Waves, right? This is wave 1 right here. This is wave 1 right here. But these waves that are also aligning with the price action waves made higher lows, and I'll go into it, right? So this one was at negative 4,000. This one was at negative 3,400. This one was at 29. This one was at 33. This one was at 5. This one was at 24. That is hidden bullish divergence. In order for you to identify bottoms and to identify when tops are forming, you need to identify hidden bullish or bearish divergence, or regular bullish and bearish divergence. But most of the time, it's hidden. So as of right now, this is why I have the yellow boxes here. We had our first pump up, retest by the moving averages. We've come down. This low here was at 80. This one's here at 85. Also lining up with higher lows on your indicators. This is actually just bullish divergence. It's not hidden because the lows on the price are also getting higher while your indicator waves are making higher. So what we need to see is this next wave down and then continue to the upside. And then we're going to set alerts at 90,000 and we're going to set alerts at 93,000. And that's why I said set the alerts there, and until we break that, nothing is going to change. Until this, well, the daily needs to go first, right? The daily needs to break the 50 line RSI, or else you're not breaking 90 to 93,000. Your 2-day needs to break the 50 RSI, or else you're not breaking 90 to potentially 94,000. Your 3-day RSI needs to break the 50 line, or else you're not breaking 91 to 97,000. Your 4-day needs to break the 50 line, or else you're not breaking 93 to 98,000. So, daily, 50 line, alert. 2-day, 50 line, alert. 3-day, 50 line, alert. 4-day, 50 line, alert. Once it happens on these time frames, once again, they happen on every single time frame. But when you're getting confirmations on longer time frames, it leads to longer pumps with higher percentages, right? Until your confirmations to take profit and get out of the play happen. And what is that? death crosses, RSI below the moving average, stochastic breaking below the 80 and death crossing. I've gone over the confirmations many times. As of right now, we remain below the moving average on the RSI. Not good. We remain in a death cross structure. Not good. So what I'm posting on X is the confirmations, right? We had our first higher low. We had our first higher low on the daily while the price was making sideways action. Golden cross structure, right? 3-day confirmation that just played out. We're in the about to golden cross, showing us that momentum at least will stay flat and we're not going to break 82 to 83,000, right? 3-day making a higher low, fighting that moving average to see if we're going to stay above. 4-day forming a higher low, right? Now we want to see, once again, the 2-day stay above the moving average and continue to break the 40 on the RSI. MACD continuously staying in a bullish cross structure. We will go back up to the 91 to the 94,000. It's just that simple. That is the video. I love you guys. I appreciate the support. What am I watching right now? The 3-day. I am going to set an alert on the MACD golden crossing. MACD crossing, MACD signal. Set alert. Go to 4-day. Do the same thing. Also, price action, 92,000, set an alert. Yeah, 92,381, set an alert. That'll notify you that you're breaking this major liquidity zone here, and then you'll probably be heading up to the 21-day moving average, lining up with around 96.5 to 97,000, and then potentially seeing some wicks around, yeah, the 96, 97,000. I like that. And then once again, we want to see all of those confirmations playing out, not only on the daily, 2-day, and the 3-day, but then officially on the 4-day, the 5-day, and the weekly. And then once you start seeing golden crosses on weekly, RSI above the moving average and above the 50, stochastic in a golden cross structure above the 50, that's when you officially break 96 to 101,000. And I do think it potentially goes to the 105 to the 110. And then once again, I keep saying, let's turn off everything. Because we're bearish on the 2-month and the monthly, but we're oversold, we're expecting this, right? We're expecting the bottom to go flat and then up. The most important thing is, do we go back up to these liquidity levels of 105 to 110,000 and stop there the same way we did here? If we do that, that is very bearish, because that is a head and shoulders pattern, right? I've posted it a while ago, but like, this is your neckline, right? And then this would be one shoulder. This would be the head. We come back up. If we stop anywhere close to here, this is your other shoulder. And the reason why I'm leaning more bearish is because the indicators on the longer time frames are showing me bearish. It's not my opinion, right? I'm not talking about Japan or anything else like that. I'm just talking about what are the longer time frames showing me. So what does the shorter time frames have a higher probability of happening? It's more bearish compared to bullish. If the 2-month was about the golden cross, then I would say, damn, we're about to go from 85,000 to 1,000,000. But that's not the case. So once again, I'm playing devil's advocate. Once again, opening up longs here with liquidation prices below 75,000. If we go back up to the 103 to the 110,000 and stop there, and then we come back down here, we have a very, very high probability of breaking this closer to, once again, if you look down, April, May, June, July 2026, and then we break this neckline and head back down to 54,000. That's the video. Love you guys. Appreciate the support. Once again, confirmations to the upside. Our golden cross structures, we're looking for the RSI to be not only above the moving average, but above the 50. If it's above the moving average and below the 50, you're going to see rejection from the 11 and 21-day moving average. While you're seeing rejection from the 11 and 21-day moving average, as long as you're staying sideways while your indicators remain bullish in creating higher low hidden divergence structures, you're getting the bottom. Once again, this bottom short-term bottom, not bull market bottom. This one lasted, 46 days of just sideways. We have been sideways for about 30 days. So if we go another week leading up until the Christmas break here in the States, I do think the trend, once again, I've been in this game for a while, money does come in closer to the end of the year, and then money comes back out closer to tax time. Enjoy the day.